Hey there, and thank you for joining us on episode 4 of Stock Market 101 by CM Tribe Learn. In the previous lesson, we looked at some stock investing strategies, how to diversify your stock portfolio, and how to read a stock chart. Please see the description below for the link to episode 3. At the end of this lesson, you'll know how to read a Japanese candlestick chart, signals you can get from candlestick patterns, and common stock chart patterns and what they mean. Be sure to subscribe to the CM Tribe Learn channel to stay up to date on all our lessons. Let's get to it. Now you're probably wondering, what the hell does a candlestick have to do with stock investing? The first thing you should know is that a candlestick chart is a style of financial chart used to describe price movements over a specific period. Each candlestick represents a specific time period. If you're looking at a 10-minute chart, then each candle is 10 minutes. If you're looking at a 1-hour chart, then each candle is 1 hour, and so on. The green candle is bullish, showing an increase in price. The red candle is bearish, showing the price going down. The candle body shows the opening and closing prices, while the wicks show the highest and lowest prices in that period. For the bullish candle, the bottom of the candle body shows the opening price, and the top shows the closing price. For the bearish candle, the top shows the opening price, while the bottom shows the closing price. It's important to learn about these, because they provide snapshot information about the stock's performance. Look at this chart for Microsoft stocks. The period is for 1 hour, meaning every candle contains the price changes, for 1 hour. Let's look at these two candles here, and see what they tell us. In the first candle, we see that the opening price was $223. The closing price at the end of the hour is $223.90. In that same hour, the price went as low as $222.40, and went as high as $224. Now let's see the next candle. It's red, meaning the opening price is lower than the closing price of the previous candle, at $223.80. It also closed lower than the opening price of the previous candle, at $222.70. Lastly, the price went as high as $225, and went as low as $222.60. Now that you have an idea of what each individual candlestick tells us, let's look at some patterns, and see what kind of signals they give. Bullish engulfing. This is when a red candle is followed by a bigger green candle that fully engulfs it. It is usually a sign that the market is changing direction, and may likely start going up. This is a buy signal. The indication is even stronger if the green candle is larger than the previous 2 or 3 red candles. Morningstar Doji. This pattern consists of 3 candles. A red candle, a doji candle, and a green candle, closing above the middle of the first red candle. It's a signal to buy because it means the buyers are taking over the market. As more buyers come in, the price of the asset goes higher. Bearish engulfing. This pattern is the opposite of bullish engulfing. It is when a green candle is completely engulfed by the following red candle. This is a sell signal, because it usually means the sellers have overpowered the buyers, and the market is experiencing a bearish reversal. Shooting star. The shooting star is a red candlestick with a small body, and a long upper wick, like an upside-down hammer. When you see a shooting star pattern at the end of an uptrend, it usually means the price has been rising up to that point, but there's no more momentum to keep it going up. Therefore, it is likely to go down, so you should sell. In the next lesson, we'll look at stock order types, differences between these stock order types, and advantages and disadvantages of stock order types. See you there. Remember to post any questions you may have in the comments section. And subscribe to the CM Tribe channel to stay up to date on our latest videos.